Yo, alright, man. I'm streaming right now, just because the reason for this is because look, I was right now I'm watching a video about indicators from one of my mentors, aka you, Warrior Trading, aka Ross Camry. But the point of me uploading this because, bro, I was really gonna watch this by myself, man. I was like, let me just watch this by myself, man, and just write down my notes. But I was like, you know what? I'm in the mood to stream, bro, and why not share you guys something. So I want to make this clear before I even start, man. Listen, I tried it. I tried indicators before. I tried them before, and they're not bad. They're actually very useful because okay, well, but they are useful. But I never wanted to trade them because I feel like I never had a good understanding of price action. So I stopped using them, and I was like, you know what? Let me just get good at price action, and yeah, pretty much let me get good at price action, just reading candlesticks pretty well. And if you guys seen that, like if you guys seen my trades, I have used no indicators. I had before back in the days when I used to be in a demo account. There we go. When I was in a demo account, and I kind of took them up because I want to do more of trading. But the reason why I kind of look back into them is because I'm not gonna lie. I watched the video about support and resistance on TikTok, and it says, "Oh, like don't trade indicators without, don't trade support and resistance, like something that I really trade and stuff without indicators," which is that is a discussion itself. But to be honest, it made a little bit more sense, and I was like, you know what? Let me give them a try again. And because my mentor that does this, um, he used indicators, and I was like, damn, he used indicators. I should try. I just want to try and see if they're useful or not, and see if it helps me with my trading. And if it doesn't help me with my trading, I'll take them off. I'll be like, you know what? I don't really need this. I don't need indicators. Let me move on and let's do something else. But we're gonna watch this. I feel like I talked a little bit too much, but we're gonna do a study session of indicators. So make sure you get your guys notebooks. Write down indicator. That's the title of mine. And we're gonna learn about indicator. It is a whole hour and 30 minutes. Who knows? I'm gonna go through all this. I kind of want to because I want to have a lot of information for tomorrow for putting stuff in. But yeah, let's get started.
I myself was searching for the Holy Grail. It had been kind of the, thank you for those.
I'll start over for you guys to answer, just to get more information and stuff.
What's up, everyone? All right, so we're going to get started here. And in today's episode, I'm going to present to you this class, the Holy Grail Technical Indicator. I would like to know, I'm teaching this class live, so thank you for those of you who are tuning in here this afternoon. If you are tuning in and you are someone who's been looking for the Holy Grail Technical Indicator, I want you to type in the chat feed exactly what you've already tried, because I want to get a sense of where you guys are at. Now, I've been trading myself for a long time. I took my first trade with real money when I was in high school in 2000, right around 2001. I had paper traded before that in 1997, 98 during the dot-com bubble, which is kind of crazy. So I have grown up with, from a very young age, with an interest in the market. And for a long time, I myself was searching for the Holy Grail. It had been kind of the never-ending hunt. I was looking for, these certain combinations of indicators, and so all of this is culminating in what I'm going to be sharing with you guys today. And so I'm seeing some of you guys talking about different moving averages, Bollinger Bands, combinations of VWAP, MACD, stochastics, TM squeeze, RSI. Okay, so I have looked at all of these and some more. So why don't we go ahead and jump in? And actually today, I'm going to show you, you can see my P&L on the screen right here, up $8,530.96 this morning.
God damn.
Using the indicators that I'm going to share with you in this class right here today. All right, so let's go full screen on this, and I'll show you my charts, and we're going to get into it. I want to try to also answer questions. So if you have questions, feel free to put them
Bless you.
in the chat feed, and I will try to answer all of them. Okay, so the topic for today's class, the Hunt for the Holy Grail technical indicator. Number one, I'm going to share with you my journey for the hunt,
Cool.
what I went through to figure out the combination of indicators that I'm using today. Then I'm going to share with you the indicators that I'm using. And number three, I'm going to walk you through the 3 steps to my strategy around these indicators. I'm also going to give you guys a free copy of my best-selling book titled How to Day Trade.
I have that.
Right. So the reason that I want to give you guys a copy of this is because during in that book, I had a section that I dedicated to the hunt for the Holy Grail. Now, I wrote that book in 2015, so that was many years ago at this point. But even then, I was in the process of trying to figure out that perfect combination of indicators, and I wanted to write about it and talk about my search because I knew that I was not alone in this hunt for the perfect combination. So, you guys, I'll put a link right down in the description of this video. I'll pin it to the top of the comments, and we'll put it right here for you guys.
It's this one, guys.
So you can check out the link. You don't have to do it right now. You can do it at the end of this episode. But this was in chapter 1, Why Do Most Day Traders Fail? And I talked about the hunt for the Holy Grail and how for many traders it is it's one of these things that perfect combination of indicators just stays just outside your grasp. And you unfortunately are never able to sort of fill that gap. And so you, at a certain point, just end up throwing in the towel. And I've seen so many traders that go through this experience and end up giving up and failing. And it's not because they didn't try hard. It's not because they didn't spend a lot of time and a lot of money looking for this Holy Grail. They just were never able to finally grasp it. By the way, those of you guys tuning in, can you tell me, is the resolution okay? Are you able to hear me and see me all right? I got myself my green tea. So hopefully this broadcast is coming through all right. All right, so this is something really important. Indicators are only helpful if they are used consistently. This may be one of the biggest challenges that beginner traders face.
What does that mean, bro?
You see indicators, you may pop it on your charts, but then you're not using it consistently. And so the result is, in hindsight, you look back and you say, oh, wow, look at that. This was an example where that indicator, was perfect. It gave me the exact right entry point, or it told me exactly, where to get out. But in real time, you neglected to look at it. So I think of as an indicator as something that I need to check consistently on every trade that I take in order for its signals to be helpful. Because if you're not checking it consistently, then it may be giving you signals to buy or sell, but you're missing it. You're ignoring it. So then that's doing you no good. You could have 20 indicators on your charts, but if you're not picking up on those signals, they're not going to help you. So the hunt for the Holy Grail for me began very early in my trading career. This is something that, I started.
I'm sorry, gang. I gotta use the bathroom, man. I'll be right fucking back, alright? Y'all don't go nowhere. That's fine. But I'm gonna go use the bathroom. I'll be back in literally 1 minute, 2 minutes. Oh shit, hold on. Let's go find the Holy Grail indicator real quick. Oh shit. Not that. Alright. Oh. Let's go watch.
Basically, as soon as I got into trading, I was looking for that indicator that would help give me buy and sell signals. That's what I was looking for.
Yo.
Buy and sell signals. I wanted an indicator that I could put on my charts that would tell me with some degree of certainty that this is the place to buy this stock, right? And this is the place to sell it. So I was getting in before the big move. I was getting out before the big flushes. I really was looking for a bit of a kind of red light, green light. I unsuccessfully tried using stochastics,
Bro, definitely
Bollinger Bands, ADX, Average Directional Index, Money Flow, RSI, Relative Strength Index, Commodity Channel Index, CCI. Now, I also tried many combinations of these types of indicators. I also tried combinations of moving average crossovers. And you know what ended up happening is I ended up having charts that looked pretty insane. I mean, they were incredibly complex. Now, one might think that these very complex charts, it certainly made it look like I knew what I was doing. It made it look like I was really dialed in.
Yo.
And one of the more recent indicators that I've seen a lot of traders talk about, Bookmap. But that's just one. I've seen so many of these different indicators over the years that people put a lot of weight into. They say, this is the one. This is the one. It shows you exactly, where to get in, where to get out. I actually remember having a student early on. This was one of my earlier classes that I taught in 2014. I had a student that was going through that class, and he would send me charts that looked a lot like this one right here. And he would be like, no, I'm telling you. Look at these spots. This is the entry, this is the exit, this is it. And so what I discovered, and this is kind of my journey to getting to this point. I spent years trying to develop this kind of figure out this perfect combination of indicators. And you know what I was trying to do? I was trying to automate my trading around those indicators. So I set up a bot, a robo trading type of thing, where it would execute trades based on exactly what I told it to do. So I was looking for essentially this combination of indicators where when I looked on a chart, I had a formula and it would show this is the place to buy. So I'd be looking for a combination of things, and I'll start to kind of lay them out for you here. So the things I was looking for reversals, I was looking for RSI to be below 5. Super low RSI. I was looking for 5 consecutive red candles. I was looking for price to be outside Bollinger Bands. I was looking for a rate of change to be at least 50 cents or higher in the last 5 minutes. And when all of those met, and they didn't meet often, when all of those met, that was a buy signal. Now, my target on this setup, this was what I was trying to automate. I would automate this for reversal trades. I would buy when these were met. I would set a 20-cent stop, and I set a 40-cent profit target. That's a 2-to-1 profit to loss ratio. Well, unfortunately, what I ended up discovering, and I learned this the hard way, was that even though there were some times that I got some fantastic trades with these parameters, and there were a few others that involved relative strength and relative volume, the total amount of shares traded on the day. What ended up happening is that sometimes I would buy into a stock that was cratering, flushing, and there was news of an offering, or there was fear of bankruptcy. There was something else going on that was so much bigger, and I wasn't able to successfully automate tying in those real-world circumstances into my formula. Now, also, for what it's worth, I'm not an MIT graduate who's working at, a hedge fund with a bunch of other geniuses in math to create these really big formulas. So the fact is, I wasn't able to find success with it. And I went through a long period of trial and error where I would create these formulas, I would back test them, they would show that they would have been profitable over a period of time. But then when I automated them and tried to run them forward, they didn't produce profits, or they produced profits, but they were a fraction of what they produced in the back test results. And you know what I actually realized I was doing?
So
I was essentially creating a formula and a set of indicators that perfectly matched a set of historical data. So all of my hunt for the Holy Grail was about finding an indicator that perfectly matched up with a historical chart. And so if I pull up my charts right here, just for instance, and I just have a basic chart in front of me right now, so I'll just show this to you. So this chart, for instance, I could add an indicator on here. Let's just say CCI, commodity channel index. And I could say, anytime, this breaks below this area here, it's an exit. And I could go back and I could say, yeah, that would have got me out right there. Or that's a short anytime it comes back inside the channel. Or anytime it breaks outside the channel, it's a long. I could have been in it way back here. And I would basically apply an indicator to a chart. I'd be able to tie out, okay, this is where it works, this is where it works. But then when I'm moving forward in price action, what worked in the past was not consistent moving forward. And so I came to discover that this hunt for the Holy Grail for me was a search for certainty. I was searching for the Holy Grail because I was scared and I was insecure. I was afraid of losing more. I was looking for a guaranteed indicator that could take the guesswork out of trading for me. Over the years, I have seen many traders present what they think is the Holy Grail. Some indicator, some combination of indicator, some new suite of technical indicators. I've also seen a lot of trading gurus out there sell and market these indicators that are the perfect Holy Grail, guaranteed to give you profit.
That shit fake as
fuck.
fuck.
But to this date, I have never seen something that has actually been consistent. I've never seen someone who's been able to take blind buy-sell indicators from an indicator, buy-sell signals from an indicator, and become a millionaire. I haven't seen it. Not even. So for those of you guys that are tuning into this live, I would encourage you to really take this in. If you're watching this episode, you clicked on this episode. Maybe just out of curiosity, out of interest. Ooh, the Holy Grail, what is that all about? But some of you clicked on this because you are actually in the middle of your own search for the Holy Grail. And I want to tell you, I know exactly how that feels.
No, I feel that, bro. I've been there, man. I've been there too. And to be honest, man, just to give my 2 cents in, man. There's no such thing as a Holy Grail, guys. It doesn't exist, man. All you gotta do is just study price actions, honestly, your favorite friend, bro, and just having intuition. Like you see things over and over. That will help you understand more, man. Honestly, reading actually like level 2 and the tape, those are really helpful too. Also the volume bars, those are really useful. I guess you can say indicator. I mean, level 2 is more of an order flow. Also, the tape is an order flow, and a volume bar, I guess that can count as an indicator. But like I said, man, there's no such thing of a Holy Grail indicator, guys. Don't fucking go find it, man. You won't find it, man. Just learn the basics of day trading. It's basically trading psychology, risk management, risk to reward, trading plan, and strategy. Those are the really 5 very important things when it comes to day trading, man. And those are going to take you really far, trust me, guys. And then if you want to experiment with like indicators, you can, like I am right now, do so, but do it with someone that's knowledgeable like this, man. This is the reason I searched up so many videos of so many different indicators, and it will from so many bunch of different people, and people use it for many different reasons. So that's why I never able to find really consistent with it. Now I'm trying somebody that I know that is reasonable and something that I am. Since day one, I watched trading and came to, adjust his strategy and kind of work into mine. And pretty much what it is, man. So, like I said, man, there's no holy grail interesting. I think that's what it's going to tell us right now. But just to save you guys some time, don't fucking search up the holy grail. Just learn the 5 basics, guys. The 5 basics that I guys told you. And that's going to take you really far. And then later, once you figure out those 5 out, and you realize that your strategy is combined with maybe some indicators, you want to figure that out, do so. Just don't expect to be the end of like he said, the holy grail. It won't happen.
Because I was there. I was in the same position that you're in right now.
Chill.
I know why you're looking for the holy grail. I know all the things that you're going to search through. And you know what I know that you might not know already?
What's up, gang?
Is I know exactly where that's going to. You're not going to find it.
Oh,
I know exactly where that's going to. You're not going to find it.
Not facts.
Because it does not. And I don't want you to end this video right now and jump off. Because if you're here because you're looking for the Holy Grail, I want to share with you what worked for me. And I want to share with you how I was able to stop that cycle of desperation, searching for the next perfect indicator, the next combination, grasping for straws. How I was able to break out of that cycle and refocus on things that actually were working. So bear with me. This is a big episode. This is something that I think is really helpful for you. And I wanted to use the title of The Search for the Holy Grail or the Holy Grail Indicator because I knew that that would attract people that may be in this mindset. And it's, like I said, the same mindset that I was in. So I understand exactly where you're coming from. And my hope right now is that I'm able to prevent you from giving in.
Yo, I guarantee you guys, people that watch this video, bro, after he said that, like, there's no holy grail or whatever, and he just said, oh yeah, I just said it to catch me. People would have dipped, man. I guarantee you guys. People would have just dipped out of this fucking that's not a fucking video, but it's a great fucking video. People would just dip out of here, man. And that's it, bro. But they don't really understand this guy's spitting facts. He knows what he's talking about, and honestly, he's gonna show us some indicators that can be useful to our day trading, especially if you're trading the momentum trading. Trust me, guys. But let's continue, guys.
To buying some custom indicator that somebody is selling, that you're able to say, wait a second, no, I realize that's not real. Now, there is something real about trading. There is something real about momentum and finding opportunities, but it's not going to come in the form of some indicator that's going to work 100% of the time. So I'm going to show you the indicators that I'm using. I do use indicators. I do find them helpful. But as I said, they're only helpful if you can use them consistently. And one of the things that I have found is that when I tend to add a lot of indicators on my chart, I tend to ignore most of them.
Facts.
And if you're ignoring them, they are doing you absolutely no good. In fact, they're even worse than having them on your chart because they reaffirm that sometimes they work, but those times they work, you probably weren't even noticing it. You weren't paying attention. The majority of the time, you're just totally ignoring their signals. So they're doing you absolutely no good. So I would encourage you for a moment here, just to step back. Now, this is what I would encourage.
So,
ask yourself, big picture, what are traders who are finding success doing? What indicators are they using? And I'm not talking about the people who are selling you indicators, but what people who are actually trading, who are actually making money in the market. What indicators are they using?
I don't know, man.
What are they doing that's different from what you're doing? Because, just to state the obvious, if you were doing everything a profitable
he's using all of these 90 EMA, 20 EMA, 200 EMA, 5, so 1, 2, 3, 4. 4 indicators, which are these lines right here. The volume bar, like I told you, is right here. The view up is, I don't know what actually color you're using. The candlesticks, I guess you can call them as indicators, but are these basically, man. He uses 5, 1, 2, wait, is it 1, 2, 3, 4, or he uses 4, 1, 2, 3, 4. I don't know if I'm using all of them. I don't even know if I'm,
trader was doing, wouldn't you in turn be a profitable trader? Isn't that kind of how that works? So you're doing something different. Now, I don't know exactly what it is because I don't know exactly what you're doing, but there's something there that you're doing a little bit differently. So we've got to figure out first, what are those successful traders doing? And then you look in the mirror and you look at what you're doing, and then you figure out, what does it take for me to get from where I'm at today to where they're at? Now, some of the actions that a successful trader is going to be able to take will be based on things that you may not have. A ton of experience that creates educated intuition, a gut feeling of when to slam that buy order with bigger size than normal. Perhaps the gut intuition of when to jump out of a trade. The good news is some of that can be gained, a lot of it can be gained with experience. So the more time you're in the market, the more you'll gain that experience, the more you'll develop your own sense of intuition. Some of the things that they have that you may not have at this point right now could be account size, buying power, things like that. But those to me are sort of secondary. It doesn't, in my opinion, take a lot of money to be a successful trader. It's much more about having a disciplined approach to how you trade the market and being willing to follow the rules of your strategy every single day. So the indicators that you can see on my chart here, I have candlestick charts. I'm using my 9 EMA, exponential moving average. I've got my 20 EMA. I've got my 200 EMA, which is really a daily level, but I do use it on my intraday charts. I use the volume weighted average price, and I use volume bar. Those are the 2, 4, 6 indicators, if you include candlesticks as one of them, that I have on my charts. Now, there are times that you'll see me add MACD, moving average convergence divergence indicator. I do think there are times when that can be helpful, especially in a choppy market, because it helps you better realize and visualize whether or not a stock is on the front side of the move or it's going into a consolidation period. That is an instance of an indicator that can be a little bit of a red light, green light, because it tells me, is the stock on the front side of the move or is it in consolidation? Now, I can also visualize that simply by looking at the chart, but it does take a bit more time to be able to recognize that. And so sometimes it is helpful to have an indicator that just gives you a bit of a red light or a green light in terms of context and of the current price relative to where the stock has been. So I'll show you an example of that specifically on MACD. But for the majority of my career as a trader, these are the indicators that I've used. Now, you might ask yourself, and this is a fair question, you might say, Ross, how do you know what you're talking about? How do I know?
How do you fucking know?
As a viewer, that anything Ross says is legitimate.
He's gonna flex.
So this is a very valid question, and someone who's come in here with the possible, who's in the middle of the search for the Holy Grail, may be a skeptical person, and you may very likely ask this question. You may also feel a little disappointed because this video does not contain a Holy Grail indicator. It does contain a lot of what I think, of course, in just my opinion, are some really valuable lessons on trading. But let me rest your mind in terms of credibility. It is important to ask about the person you're learning from. And so what I can tell you is that I turned an account with less than $600 into over $10 million of profit. My results are not typical. They're not a guarantee by any means that you'll achieve any type of success whatsoever, because most traders choosing the right stock strategy. So let's go ahead and talk now about the 3 steps to my strategy.
Word.
So the 3 steps to my strategy are based on choosing the right stocks to trade, buying on pullbacks to moving averages with a stop below moving averages, and taking profit at the first sign of weakness. All right. This is going to give you a...
All right, there you go. All right. Choosing the right stocks, guys, that's basically your watch list. Buying on pullbacks to the moving average. So basically, it kind of buys into the pullbacks a little bit and stop below the MA. Moving average in the MA? What's that? Hold on. We're at 22.58. So uses 9 EMA, 20 EMA, 200 EMA, MA. We were like, what, 22? We're almost over here. MA, stop below MAs. I'm pretty sure the pullback is going to be the 90 EMA, but I'm not 100% sure. But we can watch
These steps to my strategy are based on choosing the right stocks to trade, buying on pullbacks to moving averages with a stop below moving averages, and taking profit at the first sign of weakness. All right. This is going to give you a bit of the blueprint, not the entire blueprint. This class is not long enough to give you the entire blueprint, but it is going to give you a very good sense, high level, big picture of the strategy that I trade every single day. And I'm going to share with you the indicators that I'm using that help me with understanding whether or not I should press the buy and sell button. So let's talk first about stock selection. This is possibly the most important.
Bro goes over his stocks and like this is what I like about his videos too. Like he really goes over everything, like how day trade, but he specified the main video. Like this you don't have to, like if you just learn about indicators, this is not important. But if you are very beginning, you know this is very important. Like I said, right now we don't really have to read this. Like I said, we have seen this 100 million times before. I just don't want to waste your guys' time, or at least my time. But if you guys don't know, please feel free to watch the whole video, please. And watch more of his content if you're trying to learn his strategy, which I am learning as well, ladies and gentlemen. But to be honest, man, we would have kind of went through this. What we need to learn is more of his strategy and more how he uses this indicators to do that. You got here is talking about. This is kind of a little more important. So right here. So after you start talking about
stocks that most active traders are going to be interested in.
Facts.
That's why it had 24 million shares of volume, right?
This
was an AI stock.
24.
It's in a hot
Low
sector
flow
right now, so that certainly gave it some extra momentum. And it had news, right? So these are the reasons why this is the right type of stock to trade. Okay, so we've talked about stock selection. Now let's talk for a moment about entries on pullbacks, moving averages. Right, so if you have gotten the first step out of the way, you understand the right type of stock to trade, I would say you're halfway there. That by itself is huge. Now you're dialed in on these types of stocks each day, the types that are making big moves. So today, just for instance, we had this nice move on GFAI, which is still holding up relatively well. This was where I traded it today, which I can show you in more detail. We had CELZ today. This also made a big move. Now, this one a little bit lower priced at $1. Let's see, it started at 50 cents. It went up to $1.40. Still went up almost 200% in one day.
Yeah.
Percentage move. A little choppier. You can see a couple of nasty candles like right there on high red volume right there. Not super surprised because it's lower priced. But, you know, again, these are the type of stocks you want to be looking at. Maybe you decide, no, I'm not going to trade that one because it's a little too cheap. You focus on GFAI instead. That's fine. That's totally okay. You know, by all means, you can have there's some room there to filter some out and focus on others instead. But this is what you want to be looking at.
Word.
Now the question is, where do I get in and where do I get out? And this is where you were perhaps looking for that holy grail indicator. You're looking for a chart that, you populate the chart and it just has, a buy button there. And it has a sell button right here at the top. And then it has another buy button right there at the bottom. And then another sell button right here at the top. And then another buy button right there at the bottom. And another sell button right here at the top. And, I've seen people try to sell indicators that look just like this. And they look great. In hindsight, it's easy to put those on your chart. But in real time, when you look at all the different stocks that their algorithm is putting the indicator on, it's always the same. It's been like this every time I've looked at these indicators. In hindsight, it looks great, but in real time, by the time you're actually getting the indicator, maybe it's at the end of that 5-minute candle. Well, great. That's super helpful. It's 5 minutes late. So now, you see the sell indicator, but it's 5 minutes late. See the buy indicator, it's 5 minutes late. Stock's already moved a lot. So yes, I understand this is the indicator everybody wants, but it doesn't exist. So, all right, since that doesn't exist, what can we do? So this is how I'm looking at these stocks. I'm looking for entries on pullbacks. Now there's different forms of pullbacks. The typical pullback will have 2 to 3 red candles, and it can look like a bull flag. This again, I outline this in my book. So if you haven't checked it out, please check it out. I have a free e-copy that you can download. You can read it today. So the bull flag. Okay, a couple, and I'll just draw a picture of this for you. All right, so this is a typical bull flag candle. A couple candles up. Doesn't matter if they're red or green. I'm just drawing it. So then a couple candles of pullback, like this, and then right here, starting the next leg higher. So this is a pattern that we've seen a million times. Perfectly, this pattern will come down to your 9 EMA, your 9 exponential moving average right here. So right in this area, it's coming down to the 9 EMA. That becomes a level of psychological support. So the perfect entry on something like this with confirmation is entering right here as soon as the first candle makes a new high with a max loss at the low of this candle right here. So that's your stop. Now, this candle, if you have an $18 stock, this could have gone from 18 to 19 back down to 18.70, and this entry here is at, 18.95. So this could be a 15-cent stop, it could be a 25-cent stop, it could be a 50-cent stop, it could be a 3-cent stop. We don't know, but whatever the size of that candle is, that's your stop. This is your entry with confirmation. Your target is a retest of high of day. When it comes back up to retest high of day, you have 2 options. One is to sell it right here. The other is to hold. Well, I guess, and then the third option is to add to the position. When you add to the position, you increase your cost basis from an average round here to an average round in the middle. And then when you get that extension through the high, you're getting a bigger winner without increasing your risk because you moved your stop from down here. As soon as you added, you moved your stop up to right here. So now you have a stop at break even. So let's say you took 5,000 shares here with a $500 stop. Now up here you add another 5,000. Now you're holding a 10,000 share position with a stop at break even. The only thing you're risking is that the $500 or the $1,000 that you were up ends up going away because it comes back and stops you out. In a hot market, this is a scaling strategy that I use to add to winners. If you're interested in learning more about scaling, I will put an episode at the end, a link at the end of this episode, scaling. All right, so scaling specifically. So this is going to be how to scale in and out of momentum, and you'll see a picture of me right here. All right, so I'll probably be pointing right there. So this is an episode I'll put at the end of this class. So that's on scaling specifically. So now let's look back at this pattern. All right, so here we have this pullback to the moving average. And what you can do is you can take a starter before you have...
All right, let's write that down. Holy shit, I didn't even write that shit down. So, as you see right there in the top, guys, right here, it says typical pullback has 32 candles on a bullback pattern. It says enter during the pullback, enter as close to the moving average as possible or as soon as the first candle makes a new high. So, like, I'll explain it right now, but let's write that down first. That's actually very important. So, write that typical pullback. Hold on, I'm gonna move this big ass mic out of my face real quick. All right, typical pull back. Typical pull will have two. Bruh. Alright. We'll have 2 or 3. I need to sneeze. Excuse me. Alright. Typical pullback. We'll have 2, 3. Up on small red candles. Make sure I put small candles. Those. And it's a pull. Alright, and is a bull flag. Bull flag pattern. Alright, second. Oh my handwriting is so shit, man. Gotta fix that. But second. Alright, second of that is okay. Enter during pull back either. Oh shit. I spelled that shit wrong. That's goofy as fuck. Oh days. Either as close to the moving why the point that 9 EM close to the 9 EM hold on 9 EM as possible or as soon as the first candle makes a new high. There we go. Number 3. My fucking arm hurts, man. I don't know if you ever have your hand cramp up a little bit. Says and then set stop low of the pullback. Alright, that you guys can write down. For me, you guys know I have a stop loss. I got a stop loss in I don't know why I'm dragging forever. So I have a stop loss. My stop loss it is by cents, right? By cents. So like depending on the price of stock, that's where I would get out originally. So yeah. On that, let's continue. Hopefully you guys wrote that down. If not, pause the video. If you haven't finished, pause the video, then continue watching later.
Confirmation. Now, the only reason that I do that is if I'm getting in so close to support of that moving average that it's essentially a no-brainer to take a starter because my stop is like 3 cents away. So I might as well just take a starter. I'm only risking 3 cents a share. And then when we get confirmation, I can add there. So when you're doing that, your starter position becomes maybe down here. You add, 1,000 shares or 2,000 shares. Your stop is at the moving average. It comes up for confirmation. You add another 2,000 shares there. So now your average price is like right in the middle, right down here. And then when you add, maybe you even add a little bit below the high of day to anticipate it. You add right here. Now your cost basis, instead of being here, is like down here. You've got a better cost basis. When you get that squeeze through, you can take a little profit off the table up there, and you're locking up your winner. I know this looks complicated, but in reality, this is a fairly simple method of scaling in and out of trades. It's a fairly simple method of buying a stock that's strong. You're simply looking for pullbacks. That's what we're looking for. So this right here is a pullback, and then you get the move higher. So enter during the pullback either as close to the moving average as possible or as soon as the first candle makes a new high. Set your stop at the low of the pullback or near that support. So let's look at a couple examples. So this is an example right here of a stock that starts squeezing up. It goes from $3.70 up to a high of about $4.35, $4.40. That's a nice 10% move. That's great. We like to see that, almost 20%. Now, volume is pretty high on those candles moving up. High volume bars right here. You then get the pullback candle. Starts to pull back, and this is where a lot of traders will struggle. So a lot of traders, what they'll do is the stock starts squeezing up, and they just buy it right here. They're just like, the stock is moving higher, I'm buying it.
Oh, hell
This is called chasing. This is giving into FOMO. You're just pressing the buy button, and then you're adding here and you're adding here, but there may not be any rhyme or reason to that other than the stock is moving and I'm chasing it. That's not a great strategy long term because you'll find yourself buying these tops and catching these flushes back down. Or you may find that, you finally bought it right up here, and then when it's pulling back, you're now in the negative. Now it needs to come back up to here for you to get out break even. And that's where a trader with a little bit more experience like me may be taking profit. Because we waited for the pattern to form.
He's basically saying he will take your money, bro. He's saying that your liquidity,
patterns
bro,
is really important.
That's fucking crazy.
So this is almost the best indicator of all. It comes in the form of the chart pattern. You see the stock squeezing up. You wait for it to pull back. And then what I look for, the first candle to make a new high is that confirmation that the tide is changing and we're moving back up. So we're swinging back up. These are ebbs and flows. You'll see it on a million charts. This is a chart from 2018, but it's the same exact pattern that you'll see on a chart from today. These are the same exact patterns. These are the ebb and the flows. Why does this happen? This is reflecting sentiment. People get it really excited. They buy it up. Then they get a little scared. They sell. There's some profit taking. And then more traders come in. Next leg up. Then a little bit of profit taking. Next leg up. This is how it goes. Usually we see the first and second pullbacks are the best, and the third is where it gets choppy. That's exactly what happened here. None of this is new. These are patterns that happen again and again and again. They've been happening for years and years and years. Your job is to learn them.
Word.
So let's go back here to this example. So you could have started to take an entry down here, or you could have waited for the first 5-minute candle to make a new high. And the choice is yours. You're going to pay a slightly higher price for that confirmation, but you're getting in with confirmation, which is typically better than getting in when there's no confirmation. If you have no confirmation, it's a little bit riskier. It requires a little bit more intuition, a bit more experience. But you could have gotten in here with a stop around this gray moving average, which is the 9 exponential movement. And then you get the move up here, and you can do one of two things. One entry, one exit, book your profit, get green, get out, do it again tomorrow. That's something you want to do if you're trying to build consistency, if you're a newer trader. Or, if you'd like, you can hold the whole position and wait for your first sign of weakness, which might keep you in the trade a little longer up until about here. Or perhaps you get aggressive and you add to your position, you double your entries here at 424. You double the position up here, so now your cost basis is here. And when it goes up another 10, 15 cents, you take it off the table for a double size winner. That's okay too. The decision of whether to add, sell, or just hold until an exit indicator will definitely be based on market sentiment, market conditions, and your current, your own profit targets and where you're at on the day, and whether or not you have the cushion to take this risk. Here's another example. So this is an example of a chart from 2020. So we have a stock that's at $24 a share. It's a little bit more expensive, a little bit more similar to GFAI today. It squeezes up, and then it pulls back right here. That right there gives you that first pullback, and it's a pullback right to the moving average. Moving average pullback, it squeezes up. First candle making a new high is your confirmation. It pulls back again. You get first pullback right here, second pullback right here. So this is what we look for. The first pullback, next leg up. Second pullback gives you an even bigger leg up. Third pullback, this is where I get cautious. Goes a little higher, but I wouldn't have taken that trade. So I'm a buyer here. And I'm a buyer here. So in this case, what are all my indicators telling me? Well, the 9 moving average is showing that it's holding as support. The volume weighted average price isn't showing a whole lot because the stock is simply above it. The stock is also above the 20 moving average. It's no doubt above the 200 as well. So there's nothing really that those indicators are saying that's telling me not to take the trade. But they're not red light, green light necessarily. I don't usually trade if a stock is below them. But if they're above them, then that's fine. If a stock is below the 9 moving average, that is a place to be cautious, as I'll show you in an example from today. The volume profile, the volume is good. You've got high volume green candles, light volume red candles. High volume green, light volume red. That's great. That's what we like to see. There are times where you'll see slightly higher volume on a red candle and the stock still goes, but we do prefer to see higher volume on green. This was a little higher on the red right there. So that does happen sometimes, but again, use your discretion. This is an example of a higher volume red candle. And note how this resulted in a longer, more sustained pullback. So this one did pull back a bit more. It wasn't as clean. And it wasn't as clean because there was a lot of selling. But that's sometimes what happens when a stock goes from $1 up to $1.70 in one candle, basically. In 2 candles, that's a huge move. So it gets a little bit of a pullback, There's some profit taking. It flushes on this candle. It bounces back up off those lows, and then it starts to base out here. Now, if it had started to squeeze right here, that would have been premature because the price is well above its moving average. So it had to kind of come back down to the moving average, and then it pulled away. So it pulled away there, and then it gives you a nice big green candle, another higher volume red candle. It pulls back, this time to the moving average, a little faster, and another leg higher. What do we notice here about the first, second, and third pullback? The first worked. The second worked. The third failed. This is from, I don't actually have the date on this chart. But so when I'm looking at this one just today, it doesn't surprise me that we have the first work, the second work, and the third fail. This is a pattern that you have to learn. That right there is more valuable than any individual indicator. It's a pattern of price action. This then becomes a head and shoulders pattern, which is a technical chart. There's the head, there's the shoulder, and then that sells off right there. That's predictable. So you're beginning to learn a language here. It's a visual language of pattern recognition, recognizing patterns. These patterns happen again and again and again. They're more likely to happen on certain types of stocks. This becomes muscle memory. And I mean, this is something that can be learned, but it takes time. I understand that some people would prefer just, a black and white, just give me a text message, just tell me to buy and I'll buy. And I wish it was that easy. I was looking for the same thing. Unfortunately, I haven't found that. Even in all my years of trading, I haven't found anyone that's been able to actually send out text messages and have you get them fast enough that it's actually helpful. There's people that sell those alerts. I don't think they're useful. I really don't. I'm sorry to say, but I don't think it's helpful. I think the best thing you can do is learn through experience. Study, study, study. Watch videos like this. Take classes if you want to, but just gain experience. So again here, first pullback. Second pullback, this one ended up working, and that's not common. This one came back down, it held this level, it kind of flatlined here, and then it started to pull away again. Now, something that we probably would have noticed here was that the MACD was open and then went negative during this period right here. Because we came into a period where, look at the moving averages, they're converging right here. And then they start to pull away again as you set up another breakout. So that does happen from time to time. Now, I want to show you this episode, it's a short clip, and then I'm going to show you, well, actually, you know what? Let me skip this because I want to show you something else here just for a second. So let me just skip this. I'll just pause this. I want to show you this chart here first. I was going to show you a video, and I'll show that to you in a second. But let's look first at that.
See, bro.
So GFAI, we're working with a 5-minute chart. Okay, so on this one this morning, let's look at a couple of things. Let's take this indicator off because I was just putting that on as a joke. We can go ahead and we can look at a couple of things. Let's take this indicator off because I was just putting that on as a joke. We can go ahead and we can add MACD. You want to see MACD, so let's go ahead and... All right, so you can see how the MACD has a crossover right here. So the way I use MACD is if the MACD is above the signal line, as it was all through here, I consider the stock to be on the front side of the move, and I'm interested in trading it. When we're on the back side, during a bear market, I do not want to be messing around with it. So I wouldn't have been interested in any of these possible trades in this area. Not that you really see a lot, but sometimes you'll find traders that get kind of tunnel vision on stocks and they're still trading them when they're really not clean. So this is a helpful reminder of, is the stock on the front side of the move? Or is it coming into the back side where it's getting consolidated? So I focus on the front side. Now, right here, we've got high volume green candles. We do have a little bit of a topping tail on this candle here, and it drops down. Lighter volume candle, we're going to pull back. First candle to make a new high right here. This is a pullback pretty close to the moving averages, close to VWAP, and it rips. Very nice squeeze. It pulls back again here, but notice a little extended off the moving average. It has to go sideways a little bit, and then it starts to pull away. It creeps back up to the highs, and now the moving average just pushes it higher, and it breaks through that level of highs and gives you that really nice parabolic move up to 28. That marks the top. And this is a very high volume candle. It's a big green candle, and that's extension. That's a parabolic move, really. It went from 24 to 28. That's 4 points in 5 minutes. It's a very nice move. It was then followed by a fairly significant pullback, a bounce back up. Now we know because of this pullback, we're going into the third pullback because of that red candle. And this is where traders have that pattern recognition, and they say, nope, this is going to be too risky a place for me to be getting in. And so they end up, most traders with experience are going to say, nope, I'm not going to go for it. And in fact, short sellers are going to say, here's the place to start to get in. Now we're getting confirmation. Stop at the high. It breaks here. MACD crossover. Yep, this could be the backside. You get an immediate flush. It does rally back up, and it's been holding relatively well. So all things considered, it hasn't been a big victory for short sellers. It's still holding up quite well. Now, notice the MACD here as it's starting to come back up. Could we get a crossover back to positive? Could, and that could give you a brand new opportunity for a trade back up to the highs. I am cautious about that in the current market that we're in because we've been seeing really nice moves in the morning, consolidation midday, and we've been seeing at power hour breakdown phase. So that's what I'd be more inclined to see because that's been the current pattern. But it's not impossible that you could see a move going the other way. Okay, so now let me jump back into the slides. So I'll skip this for right now, and let's talk about taking profit. So take profit.
This is supporting, guys, but he's going over more, like I'm saying, the green on the tape and level 2. So when I first trade, it says green on the tape, price moving quickly away from the entry, bid support of buyers on level 2. I find that I can reasonably adjust stop to break even, take risk of loss off the table. When I see signs of weakening, this is the inner. I remember I took notes on this already, but I think we did. I don't know, but we could see this again. It's a big seller appear on level 2. I got in, or just a few pennies higher. The observation appearance of high sellers. A large burst of red tape. Yeah, there's a lot of losses into a pop, but then the dramatic reverse. This will be a top and tail candle as a failed breakout. Yeah, top and tail. If you guys know, now I know the word for it. So basically, if you guys we've seen this before, man. It breaks, but only breaks a teeny bit, bro. It breaks a teeny bit and then it reverses and just go against. That's called false breakout, aka a top and tail as well. So yeah, man, this is good.
Profit at or before the first signs of weakness. So when I first take a trade, I want to see strength. So what does strength look like? All right, so you've chosen the right stock.
All right, I'm gonna lie, bro. We'll see if you want to watch it, but let's add this first in, man. I entered the VWAP. I remember I had the book, which definitely should read this book for sure. I have it on my files. But let's open up Thinkorswim and let's see what's up, man. Man, it's crazy. I mean, I've been doing this, but like Charles Schwab, they kind of took over Thinkorswim. I know that's kind of crazy, man. I'm not gonna lie. I know that's kind of old news and shit. Oh shit. I know that's old news, but that's crazy, bro. Good thing nothing happened, bro. I thought my account was gonna get fucked in the booty, and I'm like, damn. Okay. Seems like we have the VWAP. Yeah, this is, I don't get why it does that, but let's see. Now we're gonna have to enter I'm only gonna enter these two, the 9 EMA and the VWAP. Alright. Oh, why does it not show right here? I'm surprised I was gonna. Oh, you have to add on all single, which I'm gonna add on all of them just because it gives me a better understanding and stuff, I guess. I don't know if it changed. Does it change? No, I shouldn't change though. Hold on. I'm gonna add that 9 EMA as well, so let's see if it changes. I don't know if it's called 9 EMA. Nah, I just have to EMA. I'll get that right here. Exponential. Exponential moving average exponential. Oh, it isn't at the 9 EMA. We do not need this. We do not need this. Oh, it's a blue. This is the 9 EMA. Right? 9 EMA. This is the moving average exponential close 90.0 apply. Oops. I need to take that shit off, man. So yeah, you see, it kind of like rejected after a few times. Look, it went straight back to the fucking VWAP. It was rejected, broke this, come straight back to the VWAP. Broke, oh, I don't know if it rejected and then came back up, but this one would be a buy-in. Would have bought this one. But you see how it rejects it? Until right here it doesn't anymore. Like, you know, right here respected it. And you would have buy it, boom. But you see, we don't really buy these in the and right here just because we see it. We gotta buy it in a level. We're seeing it in a level and it makes sense, and that's when we buy. You see how this is not in a level? It's not in a level, so for us to make sense if it's gonna go up, it really isn't that much important. You see how we have our levels here. We have our support right here and our resistance here. You know, we see how it goes down, respect it a little bit, and then just breaks, come back, and then just, you know, fucks with it, bro. But you gotta see like this, see how it's very strange. It's not in the level, so for me to get in, it'd be kind of weird. Where I will kind of be looking at maybe to get a pullback is usually around the range after a broke. Like after I bought this, after it breaks or something, if it's near here, this I want to buy or near here, near the break. If the 9 EMA is right there right now, close to the 9 EMA, like say if it's about to break and it was right here, maybe it was right there, boom, buy it, and then it rips, then great. But I don't have an other chart, so we're gonna put it, I guess, see how that works and stuff. So we're gonna put the VWAP, add. I just have to take these off right here. The VWAP always had a yellow. Apply. And then we have to put the 9 EMA here as well. See if it has the same. Let's see. Exponential average. Add this, and we're gonna just have to take these signals off. Just have that moving exponential, okay, and apply. I think this one's a little bit different. Yeah, it's a little bit different because these candles are a little bit. This one went up, get close to the VWAP, kind of broke around the VWAP, and then oh no, here's not the VWAP. This is more of the VWAP. I mean, he broke, and then I just still rejected. But we'll see, man. We'll see how it works on our trading. If it doesn't work or it's not something that we personally want to see or some shit like that, we'll take it off. Because I'm not gonna lie, these two sometimes confuse your head a little bit, and that's what we don't want, right? So we're gonna just keep it for tomorrow's trade to see how it works, how it is, and stuff. Yellow, boom, apply. And now the last thing we need is exponential moving average. Selection, boom. Take these off. And there we go. Okay, and apply. The 15-minute chart is a lot. Oh, you can see it. See it more respected. You can see how like it went up here, and it rejected. So it is. I mean, it's the same one. But yeah. let's see, 1, 2, 3, 4, 5, 6. So after the 6 minute, boom. The 5 minute to boom, boom, boom. But yeah, it pretty much just tells you the same. I think this does a 2. 87. 82, 47. 82, 47, yeah. 83, 27. 82, 72. What the was it different every single time we mark it? 742, 82, 74. 82, 47. Oh, it is different from each one. That's very interesting. If people, that's interesting. But we'll keep it, see what's up with it. And yeah, we'll see if tomorrow, if it even will help us and makes it a little better to make more decide better, clear decisions. If not, then we're gonna take it off and we're not gonna take it serious. And we're gonna just keep what we're used to, which is key support resistant and key levels. Other than that, guys, I pretty much just say. I mean, he talks about more and stuff and more about strength and stuff, but that's not really what we're looking for. Not something that we are learning about. Trust me, it is great information. I'm not saying it's not. I just really went through this, and it's really more generic information, right? Is to see if the stock has potential of going up. You want to see if it's green. The tape, what it means by that is the tape reading, which is the time to sales and price moving quickly from the entry. So that means if you buy in, it just fucking explode. That's a good strength of engine. And the big support of buyers on level 2. So there's a lot of stacking, or a lot of just stacking pretty much. So if it's a stacking at $5, you want to see a lot of people buying at $5 on the level 2. And the fourth one's more about like keeping your wrists like nice and tucked and good. And then the level 2 is just the opposite of what the green is. But other than that, man, that's pretty much it, man. It was a great session. We learned a lot of things. This is the indicator. So for these, I'm not 100%. I don't know. I didn't feel that great, but we're gonna give them a try and see how if they really. I wouldn't say if they really work. If they really like give me a better I don't know. We'll find out. What I'm trying to say is that it just gives me a better reading of the market and maybe helps me a little bit more with my entries and stuff. And if not, then of course I'll just take them off and I'll move on type shit, you feel me? But if they do, great. If they don't, it's whatever. But other than that, guys, I'm gonna get off, man. We did a great study session, man. I'm glad that everybody took time out of my day around like 10 p.m. to study, man. Because it's always good to study. It's always good to look back and stuff. I'm telling you, guys are really learning about day trading, and you want to learn about day trading. There's a lot that goes into it. I say just do a lot, the most research you can. Just read a lot of books and watch a ton of fucking videos about day trading, man. And eventually you'll figure out what you want to do with it, because there's a lot of different day trading strategy, a lot of different things about day trading. It's a lot, you know what I'm saying? People trade very differently. You might trade momentum or you might trade ranges. I don't fucking know. The point is, do as much research as possible, and after you do, right, then you can take step by step. There are things I will say that might persuade your process. So the fundamentals of day trading you gotta learn, bro, is day trading psychology is one of the most biggest important things when it comes to the most important one. And after that's gonna be risk management, and that's gonna be your plan, which is so basically what that means, man. Day trading psychology is basically everything, all of your emotions, everything that get when it comes to discipline. Trading psychology is more about like the discipline point, keeping yourself check with your rules and stuff, and just get in the habit of becoming disciplined. Risk management, or your risk to reward, is pretty much about that. How much you're willing to lose per trade, and what is you're willing to win, right? And the second and third, it will be the plan. It's more of your strategy and stuff, doing details of the stock you're trading and all that stuff. and tactical. I mean, not technically that's not everything, but your plan is more, yeah, all that. It's basically tactical analysis, man, and your strategy, all combined and stuff, and really figuring shit out. But I'm just saying, watch as much shit as you can, and then take the 3 things that I told you, and try to find your way to fit all that in, man. I know it's a lot, man, but trust me, guys, you can do it. It just takes time and time and time. I'm still myself as learning, still trying to figure it out, and you know what I'm saying. I'm with y'all, man. I'm trying to figure it out as well. But I'm gonna stop talking, bro. I feel like we're talking forever and shit. So I'm gonna see you guys tomorrow. Tomorrow's Wednesday, another training day in the morning, and we're gonna see how we do with the indicators. If I feel like they're just disturbing and they just fuck me up and I don't like them, we'll take them off and we'll just keep what we've been using before. So I'll see you guys tomorrow, okay?